A single McDonald's in Britain can pull in over £3 million a year. But here's the part nobody tells you. Most of that money never touches the owner's pocket. In fact, some McDonald's franchisees are quietly worth millions, while others are barely scraping a living after working 60-hour weeks. So, which one is it? Today, we're pulling apart the real numbers behind owning a McDonald's in the UK, and what's left once McDonald's takes its cut. Most people assume the bloke who owns the local McDonald's is sitting on a fortune. Golden arches, endless queues, a brand worth billions. Surely the money just rolls in. But that assumption is built on a misunderstanding. Owning a McDonald's isn't like owning a normal business. You don't fully own the building. You don't set your own prices. You don't even own the brand you're trading under. What you're really buying is a 20-year license to run someone else's empire under someone else's rules, with someone else taking a slice of every transaction. And that changes everything about how the money actually flows. Here's how it works. McDonald's Corporation owns the brand, the systems, and, in most UK cases, the land and the building itself. A franchisee pays for the right to operate inside that machine. This is where it gets interesting. McDonald's isn't really in the burger business. Famously, much of its global profit comes from property. Franchisees pay rent on top of everything else, which means McDonald's earns whether or not your restaurant has a good week. The franchisee's job is simple on paper: run the restaurant, hit the standards, keep the tills ringing. But every pound of revenue gets divided up long before it becomes profit. So, what does it actually cost to get in? McDonald's UK sets a minimum investment requirement of around £300,000, but that's the floor, not the ceiling. Restaurants franchised out in recent years have sold for anywhere between £900,000 and £1.5 million, depending on size, location, and sales history. You need at least 25% of that total in unencumbered funds, meaning your own money, not borrowed. On a £1 million restaurant, that's £250,000 of pure liquid cash before the bank gets involved. On top of that, there's a one-off franchise fee of roughly £30,000 just to license the name and the operating system. The remaining 75% is typically financed through a bank loan, and McDonald's is considered such a safe bet that lenders like NatWest and HSBC often roll out red carpet terms for it. But here's the catch. Taking on hundreds of thousands in debt means a huge chunk of future profit is already spoken for, years before you flip a single patty. This is the part most aspiring owners underestimate. Once the restaurant opens, the deductions start immediately. There's a monthly service fee, usually a percentage of gross sales, paid to McDonald's for continued use of the brand and support systems. Then there's a contribution to the National Marketing Fund, another slice of revenue funding the adverts you see on TV and YouTube. Then there's rent. Because McDonald's owns most of its UK sites, franchisees pay rent that's often tied to how well the restaurant performs, so the better you do, the more McDonald's earns alongside you. Add staffing costs, food costs, utilities, equipment maintenance and loan repayments, and what looked like millions in revenue starts shrinking fast. What most people don't realize is this: turnover and take-home pay are two different stories. McDonald's doesn't let just anyone in. There's no option to be a silent investor, not in the early years anyway. You must be what they call an active operator, meaning you're expected on-site, hands-on almost every single day. No passive income here. You also need a strong net worth on top of your liquid capital, plus a clean financial track record. Most new franchisees don't build from scratch either. They buy an existing, already trading restaurant from McDonald's or another franchisee, which is partly why the entry price is so steep. It's less start a business and more buy into a system that already works at a premium. Now to the question everyone's actually here for. How much do they really earn? The low case, a single restaurant owner, early into their franchise term, still carrying significant debt. After rent, fees, wages and loan repayments, take-home pay can sit in the £50,000 to £90,000 range. Solid, but nowhere near the fortune people imagine. The medium case, an established single restaurant with the loan mostly paid down. UK data suggests average sales per location often exceed £2.9 million, with profit margins around 10%. That translates to roughly £290,000 in restaurant profit, though once personal drawings, reinvestment and tax are factored in, owner take-home pay often lands closer to £100,000 to £170,000 a year. The high case, multi-unit operators, owners running 5, 10, even 20 restaurants under one umbrella. This is where real wealth gets built. Combined profits across multiple sites can push total annual earnings well past £1 million. McDonald's itself models long-term franchisee returns at 20 to 25% annually over the full 20-year agreement. This is where it gets interesting. The biggest McDonald's fortunes in the UK aren't made from one restaurant, they're made from scaling. Behind those numbers is a punishing day-to-day reality. Franchisees are managing staff rosters, food safety audits, equipment breakdowns, supply deliveries, and customer complaints, often before McDonald's head office even wakes up. Most successful owners aren't standing behind the till themselves forever. As they scale, they shift to management, overseeing store managers who run daily operations, while the franchisee focuses on numbers, expansion, and compliance with McDonald's exacting standards. But that shift takes years to earn, and it only comes after proving the business inside out. But here's the catch: none of this is risk-free. Swoop's industry analysis estimates that on a typical £1.8 million investment, it can take around 8.5 years just to recover your initial capital. That's nearly a decade before you're technically in profit on your own investment. Rising minimum wage costs, energy bills, and food inflation continue to squeeze margins across UK fast food. Franchise agreements run for 20 years, but they can be terminated if standards slip, meaning your entire investment is tied to constant compliance. And because McDonald's controls pricing, branding, and menu decisions centrally, franchisees have less control over their own business than the public assumes. So, how much does a McDonald's owner really earn? The honest answer is, it depends entirely on scale. A single restaurant owner might be earning a comfortable, hard-won six-figure income after years of debt repayment. A multi-unit operator running a portfolio of restaurants can be earning seven figures, built on decades of reinvestment and expansion. What's clear is this: McDonald's isn't a get-rich-quick scheme. It's a high-barrier, high-discipline business model that rewards patience, capital, and relentless operational consistency. The Golden Arches might be one of the most recognizable brands on earth, but underneath, it's one of the most demanding business models a franchisee can buy into. So here's the real question. Knowing what it actually takes, would you ever put £250,000 on the line to own one? Let us know in the comments.